Today, we're diving into a financial revolution that's quietly unfolding in Kenya. We're talking about a world where the key to getting a loan might not be in a bank vault, but maybe chewing grass in your own backyard. Let's get into it.
So let me ask you a strange question. Could your fridge get you a loan? It sounds kind of weird, right? I mean, we usually think of collateral as something big, something permanent like a house or a piece of land. But what if the everyday stuff you already own was the real key to your financial future?
Well, in Kenya, that's not a hypothetical question anymore. The answer is a definite yes. Since 2017, a pretty groundbreaking law has totally rewritten the rules of lending. And we're not just talking about your fridge. It's your TV, your furniture, your work equipment, and yeah, even your livestock.
So this is the legal machinery that makes it all work. The Movable Property Security Rights Act, or MPSR. Basically, it created a system where things that, well, move, your car, your tools, your herd of goats, can be officially registered and used to back up a loan. This is a huge shift from the old way of doing things that basically locked out anyone who didn't own land.
The government even gave this initiative a really powerful name, Hakisho la Ahadi, which translates to the assurance of the promise. And that promise is all about financial inclusion, giving every single Kenyan, from a small business owner in the city to a farmer in the countryside, a fair shot at getting credit.
And listen, this is not some small-scale experiment. Just get a load of this number. In one single year, we're talking over 5 trillion Kenyan shillings in credit that was unlocked using these movable assets. That's an absolutely staggering amount, and it just goes to show how fast people are jumping on this. Okay, so with that kind of money flying around, you gotta wonder, right? What exactly are people putting on the line to get these loans? The answer is probably not what you're thinking. So check this out. What's at number 1? It's not cars, which is what you might expect. Nope, it's household items. We're talking over 100,000 of them. And then look down at number 5, nearly 35,000 registrations for livestock. This data shows a massive change in what we even consider a valuable asset. But this whole story isn't just about a successful government policy. The fact that things like fridges and TVs are the most common collateral, well, that tells us something much deeper about the economic pressures a lot of Kenyans are facing right now. And here's the crucial part. For a lot of people, this isn't about getting a loan to expand a business. It's about getting short-term credit just to get by. With the cost of living on the rise, people are using what they have to pay for immediate needs, food, rent, school fees. So while the MPSR system is a lifeline, it also shines a light on just how fragile things are for many families. But amidst that economic strain, a really unique opportunity is starting to bubble up. Let's talk about what you might call the original movable asset, the thing that is the absolute backbone of Kenya's rural economy, livestock. These are Kenya's walking bank accounts.
This slide just lays it out so perfectly, the old world versus the new world of finance. On the left, you've got the fixed, immovable stuff that very few people could actually offer up. And on the right, you have all the dynamic, movable assets that millions of Kenyans own. And for the rural population, livestock is probably the most important one on that list.
And you can see the momentum is really starting to build. Now, yeah, it's ranked 5th overall, but nearly 35,000 registrations? That's a huge start. It shows that farmers are starting to see their animals not just as their livelihood, but as actual, bankable assets. This is the beginning of something really big.
But there's always been a problem. For generations, a farmer's wealth has been walking around in their fields. But traditional banks have always been, well, skeptical. How do you accurately value a cow? How do you track it? How can you be sure that the cow you saw last week is the same one that's there today? This has always been the major roadblock.
And this is where innovation just blows the doors open. A company called Imfuyo is stepping right into this gap. They're using technology and data to solve the exact problems that have made banks so nervous. They're basically building the bridge between the farmer and the lender.
Imfuyo's mission is simple but totally revolutionary. Make livestock bankable. Now, they aren't a bank. Think of them as a data company that creates the systems needed to turn a living, breathing animal into a trusted, verifiable asset that a bank can finally feel confident about.
So here's how they do it. It all starts with digital identification, like a unique passport for each animal. Then, they use data about its health, its breed, its productivity to figure out exactly what it's worth. After that, they add a layer of insurance to protect against loss. And finally, with all that in place, this secure, insured, and valued animal can be used to get a loan. The whole thing is a system built on trust, but it's a trust that's backed by hard data.
And it's really a complete package. It's not just about the data. It's about combining that data with insurance, with smart financial modeling, and with investment that's designed to make a real-world impact. All these pieces have to work together to unlock the true value of these walking bank accounts.
But as amazing as all this sounds, we have to be realistic. We're still in the early days. For this new era of finance to really take root across the whole country, there are still some pretty significant hurdles to get over.
And these challenges are systemic. I mean, a lot of people still don't even know this system exists. Many banks are still cautious, playing a wait-and-see game. There aren't standard ways to value all these different assets yet. In rural areas, just getting a stable internet connection can be a huge barrier. And then there's the question of what happens if someone defaults. The legal system for repossessing, say, a TV is still being worked out.
So, at the end of the day, this can't be solved by just one group. To really fulfill that assurance of the promise, it's going to take everyone. The banks, the tech innovators like Imfuyo, and the government policymakers all working together to build a stronger, more trusted financial ecosystem.
And that really gets to the heart of it all, doesn't it? This isn't just a story about Kenya or about cows and fridges. It's really a glimpse into the future of finance for all of us. A future where value isn't just about the physical things you own, but about our ability to use data to prove what something is worth, protect it from risk, and ultimately unlock its potential for everyone. It kind of makes you wonder, what other untapped assets are just waiting out there to be unlocked by data?